Hey Bowtie Nation, Joseph Hogue here with a dividend stock that has increased its payment by 66-fold over the last 5 years. That's 130% dividend growth every single year. And that's not even my favorite in the list. I'm counting down the 7 dividend stocks with the highest 5-year dividend growth, including one stock that, if you had bought it 5 years ago, you'd now be earning 26% return every year just on the dividends alone. Our first dividend stock actually has the lowest dividend growth on the list, but the highest return on investment. Innovative Industrial Properties, ticker IIPR. Now let me explain that because I know it's about as clear as mud. If you look at the dividend history for IIPR, it's increased that payment from just 25 cents a share in 2017 to $1.80 recently. And while that's an impressive 7-fold increase, or about 48% per year dividend growth, it's still the slowest dividend growth on our list. Maybe that gives you an idea of the kind of dividend growth that we're talking about with these 7 stocks. But if you look at this another way, if you had bought those shares of IIPR 5 years ago at that price of $27.65 a share, you would now be receiving a dividend of $7.20 a year. That is a 26% annual return on your investment just on the dividends alone. That is the power of these dividend growth stocks. IIPR is unique among real estate investment trusts, or REITs, in that it leases to companies in the regulated cannabis industry. The company has stepped in to meet the industry's limited bank funding to supply real estate for grow and retail operations. IIPR owns 111 properties with 30 tenants across 19 states. And while all cannabis-related stocks have fallen hard over the last year, I consider IIPR more of a real estate play than marijuana. The industrial and retail properties owned by the company can always be reworked to serve other industries, so it really doesn't make sense that the stock has sold off quite as badly as it has over the last year. And these shares are at an attractive valuation, along with that 7.8% dividend yield. We'll get right back to our dividend growth list, but first, I want to highlight a special offer from Moomoo, one of the investing platforms I use to trade stocks, options, ETFs, ADRs, and OTC shares in multiple markets. The Moomoo app has all the tools you need to find investments and strategies and is available for US, Singapore, and Australian users. My favorite new feature here is the industrial chain mapping. This is something I've been wanting for a long time, and it's a great tool even if you don't use the app. Clicking through, you can explore some of the hottest trends like electric vehicles, solar power, and healthcare. Each one of these maps out the supply chain and shows you what stocks to research. It's just a great way to really understand an industry and its key players. For US users, sign up to Moomoo now and you can get up to 17 free stocks worth up to $2,000 each with your deposit of $1,000 to invest. That's a free stock just for opening an account, 6 more when you deposit $100 and start investing, and up to 10 more free stocks if you deposit up to $1,000. And for my Aussie mates, Australian users can get up to 110 AUD worth of cash coupons to be used in trading with terms and conditions. Even if you don't think you're going to be using this app, use the link I'll leave in the description below to get your free stocks and try it out. Next on our dividend list, one of my favorite stocks in the utility sector, NRG Energy, ticker NRG, with its 4.3% yield. The company is one of the largest energy producers in the United States with over 6 million residential customers and 14 gigawatts of generation across electricity and natural gas. Even though this is an independent provider, it still operates in that protected, regulated market for electric and natural gas, so cash flows are extremely consistent. That's helped management commit to that constant dividend growth while still being able to grow the company and the share price as well. The recent acquisition of Direct Energy is expected to produce over $300 million in savings and drive part of that strategic growth initiative, growing the dual fuel business and streamlining production. That should result in even stronger cash flows and higher dividends. Shares of NRG were paying a dividend of just 3 cents a share in 2017, but have increased that amount by more than 12-fold to 38 cents a share over the period. That is a 66% increase. We're just getting started on our list of dividend growth stocks, but I do need to warn you here. That past history of dividend growth doesn't guarantee that these stocks are going to increase their dividends by that same rate over the next 5 years. You always need to ask yourself, well, what caused the company to be able to grow its cash flow like that in the past, and how likely is that to happen in the future? You can also look at coverage ratios like the payout ratio to find stocks with more room to increase their dividend. Whether they do increase their dividend at that same pace over the next 5 years or not, what all 7 of these stocks do have is the firm commitment to shareholder cash return. Management has said our investors value their dividends more than anything else, and we're going to respect that with a focus on dividend growth. And this next stock has already warned that it would slow the pace of dividend growth, but it still offers a great yield and upside potential. Devon Energy, ticker DVN. Devon is a leading oil producer in 3 states, North Dakota, Texas, and Delaware. With oil spiking over the last 2 years, these assets have become cash flow machines, and like most oil companies, Devon is choosing to return that cash to shareholders rather than just acquiring assets at higher prices. Free cash flow quadrupled since its merger with WPX, and even on lower oil prices, this is a cash machine. With oil now around $80 a barrel, the company can produce a 9% free cash flow yield, and if oil jumps past $100 a barrel in what Goldman Sachs is calling the next super cycle, that yield grows to 13%. Now, this all helped Devon increase its dividend from just 6 cents a share in 2017 to $1.35 recently. That is an 86% annualized growth in the dividend payment. Now again, that $1.35 per share dividend is lower than the peak of $1.55 last year. And the company has warned that with those lower oil prices this year, it would have to protect its cash flow and won't be able to grow the dividend at that same pace. But this is still a stock that pays an 8.7% dividend yield and is set for more growth if oil prices rise again. Our first bank stock on the list, First Bancorp, ticker FBNC, hasn't grown its dividends quite as fast, but could be in for stronger growth ahead. All you out there in the nation know I'm watching bank stocks like a hawk this year. With interest rates up on loans, it could be the only industry to benefit from that rise in rates. In fact, banking analyst Mike Mayo thinks the banks could be coming into an era of profitability as good as any time since the 1980s. First Bancorp is a small bank at just $10.5 billion in assets, with 108 branches in North and South Carolina. That still makes it the largest community bank in North Carolina and one of the top 20 public banks according to S&P Global Market Intelligence. The acquisition of Grand South builds on its asset base and gets it to 116 branches in all 10 of the major Carolina MSAs. Return on tangible common equity, the key profitability metric for banks, rose to 19.4% in the most recent quarter. That's higher than Bank of America and rivals some of the heavyweights like JP Morgan for returns. First Bank has increased its dividend to 22 cents a share from just 8 cents a share 5 years ago, nearly 3 times higher, and an annualized 22% pace. 3 more dividend stocks to watch, including our top dividend growth company, with a 66 times increase in its payout. But all you out there know, I've got to send a special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. I love that this dividend stock made the list. Advance Auto Parts, ticker AAP, with its 4% dividend yield. Not only has Advance grown its dividend from 6 cents to $1.50 per share for a 90% annual growth over the last 5 years, but I did some research last year into the stocks that held up best in a recession. Of the 500 stocks in the S&P 500, just 8 of them produced positive returns when the stock market crashed in 2008. Among those, Advanced Auto Parts. That's because when people start worrying about the economy and their jobs, they fix up their old cars instead of buying new ones, and means stable cash flows for auto parts stores. Advance has over 4,700 stores in North America, along with 1,300 CarQuest branded stores in locations of Mexico and Caribbean. Overall, it's just a solid stock that can produce that dividend growth, but also a little more safety than what you might see in some of these other stocks on the list. We're coming up on our fastest growing dividend stocks with Cal-Maine Foods, ticker CALM, and its 5.7% dividend yield. Now, Cal-Maine is the largest U.S. producer and distributor of fresh eggs, with a full 20% of the market and $1.8 billion in annual revenue. The company has a fully integrated operation from feed mills to breeding, production, packaging, and distribution, giving it profit drivers at every step of the business. And with the volatility in egg prices lately, that supply chain integration is a bonus that just helps keep the costs down and revenue stable. Cal-Maine has increased its dividend from 8 cents a share in 2018 to $1.35 per share this year, an increase of 75% annually over that period. And while the dividend has fluctuated quite a bit, the company is committed to that shareholder cash return. Investing in individual stocks is one thing, but to go further, you need a plan. Check out the video here for the 3 strategies to invest $1,000 a year. 3 stock portfolios, including one that could 10x your money. Next on our dividend growth list, Radian Group, ticker RDN, with its 3.6% dividend yield and growth you won't believe. Radian provides mortgage and real estate services, primarily private mortgage insurance, underwriting, and title services. It's basically an insurance company with a real estate kicker. And despite the weakening real estate and the mortgage market over the last year, both net income and book value per share rose in the most recent quarter. So this is more of like stable insurance type cash flows than a housing market stock, and shares have held up even as residential REITs have dropped. Radian has grown the dividend from basically nothing, just a third of a penny per share in 2017, to 20 cents a share last year. That is a 66-fold increase or 132% annualized growth in the payout. Get your free shares on Moomoo with the link below or click on the video to the right for those 3 strategies to invest $1,000 right now. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.